Are you ready to take charge of your financial future and secure lasting wealth? In today's video, we'll dive deep into the art of developing personal finance habits that will stand the test of time. We'll explore essential strategies like income source evaluation, expense tracking, expert collaborations, debt avoidance, and smart insurance and tax planning. But that's not all. We'll also highlight the importance of maintaining a top-down view of your finances, and we'll share practical tips on automating savings, using budget calculators, and setting realistic financial goals. Stick around, because by the end of this video, you'll be armed with the knowledge you need to build a rock-solid foundation for your financial well-being. Let's dive right in with our first key point: managing your personal finances with a bird's-eye perspective. Keeping a bird's-eye view on your personal finances is like being the captain of your financial ship while professionals handle the details. It involves regularly overseeing your personal balance sheet, understanding your assets and liabilities, and monitoring your income sources and expenses. This practice is crucial for ensuring financial stability and making informed decisions that foster and preserve wealth. By staying abreast of your financial situation, you can adjust your course as needed, whether it's saving more, investing wisely, or cutting back on unnecessary expenses. It's akin to having a financial compass that guides you toward lasting financial well-being. Number 2, consistently examining income and monitoring expenses. Consistently examining income and monitoring expenses is a foundational practice in effective financial management. It involves periodically assessing all your streams of income, such as your salary, investment dividends, rental income, or earnings from side hustles. This practice ensures that you have an up-to-date understanding of your financial inflow. Equally important is the diligent tracking of your expenses, which allows you to gain insights into how you're allocating your money. By identifying areas where you might be overspending or discovering opportunities to save, you can take control of your financial situation. As a helpful tool for simplifying this process, consider using Mint, a widely used app that consolidates all your financial accounts in one place, making it easier to monitor your income and expenses accurately. This meticulous approach to income and expense management is a cornerstone of prudent financial planning and lays the foundation for achieving your financial goals. Number 3, engaging with expert financial advisors for collaboration. Engaging with expert financial advisors for collaboration is a strategic move for individuals seeking to optimize their financial well-being. These experienced advisors offer tailored guidance, particularly beneficial for entrepreneurs and small business owners. Their expertise spans crucial areas like tax planning strategies, investment management techniques, and retirement savings options. By working closely with them, you gain access to valuable insights that are aligned with your specific financial situation and goals. Effectively managing personal finances isn't just about tactics. It also involves cultivating the right mindset for long-term wealth accumulation. Learning from the experiences of successful individuals who have achieved financial prosperity through avenues like entrepreneurship or stock investments can provide valuable inspiration and guidance. In essence, collaborating with financial advisors and adopting a growth-oriented mindset complements each other, equipping you with a holistic approach to securing your financial future and building lasting wealth. Number 4, avoiding high-interest debt. Avoiding high-interest debt is a paramount personal finance practice when it comes to achieving and maintaining lasting wealth. High-interest debts, often associated with credit cards or certain loans, can be financially crippling due to the substantial extra costs they incur. Paying double or even triple the original purchase price due to high interest rates can severely impede your ability to accumulate wealth and achieve your financial goals. Therefore, a fundamental strategy is to prioritize low-interest loans whenever borrowing is necessary. By opting for loans with lower interest rates, you build a more solid financial foundation, reducing the financial burden and freeing up resources that can be redirected toward wealth-building endeavors. This practice not only saves you money, but also ensures that your financial journey is on a more prosperous trajectory, ultimately paving the way for sustained wealth. Number 5. Approaches for settling current high-interest debts. When faced with the challenge of paying off existing high-interest debts, having a well-thought-out strategy is crucial for financial success. Two popular approaches to tackle these debts effectively are the debt snowball method and the debt avalanche method. The debt snowball method involves starting by paying off your smallest debt balances first, while making minimum payments on your larger debts. This method provides a psychological boost as you quickly eliminate smaller debts, creating a sense of accomplishment and motivation to continue. It's like clearing away small obstacles on your path to financial freedom. On the other hand, the debt avalanche method prioritizes paying off debts with the highest interest rates first. By tackling the most financially burdensome debts initially, you can minimize the overall interest you pay over time. This approach can save you money in the long run and help you become debt-free more quickly, albeit without the same psychological boost as the debt snowball method. Ultimately, the choice between these methods depends on your personal preferences and financial circumstances. Whichever approach you choose, the key to success lies in staying consistent and disciplined in your repayment plan. Regularly budgeting and allocating extra funds toward debt repayment will accelerate your journey to financial freedom, ensuring that high-interest debts no longer hinder your path to lasting wealth. Number 6. Opting for low-interest loans when borrowing is necessary. Opting for low-interest loans when borrowing is necessary is a critical financial decision that can significantly impact your long-term financial well-being. To do this effectively, you'll want to explore various options and lenders to find the most favorable terms. Comparing offers from different lenders is a smart practice, as it allows you to identify the loan with the lowest interest rate, ultimately saving you money in the long run. Tools like Bankrate's online comparison tool can be immensely helpful in this process, enabling you to assess personal loan rates based on factors such as your credit score and desired loan amount. Entrepreneurs and small business owners can further enhance their borrowing prospects by maintaining good credit scores. Timely payments and responsible credit utilization can lead to higher credit scores, which often translate into more advantageous loan terms, including lower interest rates. Additionally, exploring peer-to-peer (P2P) lending platforms can be a viable option. P2P lending connects borrowers directly with individuals willing to lend money, potentially offering lower interest rates compared to traditional banks. In the grand scheme of building and preserving wealth, avoiding high-interest debt is a fundamental habit. This includes strategically addressing existing debts and, when necessary, opting for low-interest loans. By making informed choices and seeking favorable terms, you pave the way for financial prosperity over the long term, ultimately helping you secure your financial future. Wealthy families often employ these strategies to maintain financial stability and protect their assets, making annual assessments of their financial situation with trusted advisors to ensure their insurance policies align with their needs, manage risks, and seize opportunities for improvement. Number 7. Yearly consultations with financial advisors for insurance planning. Yearly consultations with financial advisors are vital for comprehensive insurance planning. These meetings provide an opportunity to continually assess and refine your insurance needs as your life evolves. The expertise of financial advisors is invaluable in this regard, as they can help you identify any gaps in your coverage and suggest additional policies that may be advantageous based on your specific circumstances. Furthermore, they can provide guidance on selecting the most suitable type of insurance for each requirement. For example, they can help you decide between term life and whole life insurance, or assist in determining the appropriate level of disability income protection. These annual check-ins ensure that your insurance portfolio remains aligned with your financial goals, providing you with the peace of mind that comes from knowing you have the right coverage in place to protect yourself and your loved ones. Number 8. Keeping up to date on tax regulations and investment costs. Keeping up to date on tax regulations and investment costs is a hallmark of financial wisdom, particularly among affluent individuals who understand the profound impact these factors have on their wealth. To achieve this level of awareness, it's essential to keep tabs on several crucial aspects. Firstly, being mindful of unrealized gains in investment portfolios is vital, as these can affect your tax liability when those gains become realized. Secondly, understanding the intricacies of employer benefit plans and how they fit into your overall financial strategy is key. Moreover, keeping an eye on the fees associated with your investments is crucial to ensure that they don't erode your returns over time. Equally important is staying informed about changes in tax laws that could influence your financial situation, both personally and professionally. To accomplish this, consider subscribing to credible finance news sources like the Wall Street Journal, which provide reliable and up-to-date information on financial and tax matters. Following expert blogs, such as the Tax Foundation's blog, can offer valuable insights into tax-related topics. Additionally, attending workshops hosted by local accounting firms can provide you with practical knowledge and strategies to optimize your financial affairs. The more knowledgeable you become about taxes, investment fees, and related financial issues, the better equipped you'll be to minimize tax liabilities, maximize your wealth accumulation, and ultimately secure your financial future. This proactive approach to financial awareness is a hallmark of successful wealth management. Number 9. Investing in a tax-efficient manner. Investing in a tax-efficient manner is a strategic approach that can significantly enhance the returns on your investment portfolio while minimizing your tax liabilities. When embarking on this journey, it's highly advisable to seek the guidance of a professional who specializes in tax strategies. This expert can offer invaluable insights into selecting investments that generate income that is either entirely tax-free or subject to postponed taxation. For instance, tax-efficient investments might include municipal bonds, which often provide interest income exempt from federal taxes and, in some cases, state and local taxes. Additionally, retirement accounts like 401ks or IRAs are powerful tools for tax-efficient investing, as they can allow you to grow your investments without immediate tax consequences, potentially leading to substantial tax savings over time. By consulting with a tax strategy specialist, you can tailor your investment portfolio to align with your financial goals and optimize tax efficiency. This proactive approach not only preserves more of your investment gains, but also helps you make the most of tax-advantaged opportunities, ultimately enhancing your wealth-building efforts. Number 10. Donating to charity. Donating to charity is a philanthropic act that not only allows individuals to support causes they care about, but also offers potential tax benefits. When you donate to qualified charities, you can often deduct those contributions from your taxable income. This means that the amount you donate reduces the income on which you have to pay taxes, potentially lowering your overall tax liability. One strategic way to approach charitable giving is by setting up a donor-advised fund. A donor-advised fund is a specialized account that you create with a financial institution or a charitable organization. You contribute funds to this account, and then you can recommend how those funds should be distributed to various charities over time. This approach offers several advantages. Firstly, it allows you to make a more significant impact by consolidating your giving into a single fund. Secondly, it provides a structured and organized approach to your philanthropy, helping you plan and manage your charitable contributions more effectively. Furthermore, donor-advised funds can be particularly beneficial for individuals with substantial assets or those who want to engage their family in charitable giving. It allows you to involve your family members in the decision-making process, fostering a sense of shared purpose and values. Additionally, these funds often have professional investment management, potentially growing your contributions over time and increasing the impact of your charitable giving. Number 11. Planning your estate. Planning your estate is a crucial financial strategy that involves working with an experienced estate planning attorney to create a comprehensive plan for the distribution of your assets upon your passing. This planning isn't just about writing a will. It's a strategic approach to minimize the tax burden on the assets you pass down to your heirs. By doing so, you can ensure the preservation of your wealth for future generations. One essential aspect of estate planning is the incorporation of strategic insurance and tax planning into your personal financial practices. This means considering various insurance policies and tax-saving strategies that align with your long-term goals. For instance, life insurance can be used as a tool to provide for your loved ones and cover potential estate tax liabilities. Effective tax planning can help you legally minimize the taxes that your estate may owe, ultimately safeguarding more of your assets for your heirs. It's crucial to emphasize that estate planning is not a one-size-fits-all endeavor. Your financial situation, family dynamics, and goals are unique, and they should be treated as such. That's why consulting with professionals who specialize in estate planning, insurance, and tax matters is paramount. These experts can provide tailored advice based on your specific circumstances, helping you create a plan that not only protects your wealth, but also ensures a smooth and efficient transfer of assets to your beneficiaries. In essence, estate planning is about securing your financial legacy and ensuring that your hard-earned assets continue to benefit your loved ones for generations to come. Number 12. Useful budgeting methods. Useful budgeting methods are essential for anyone looking to build and sustain wealth over time. At its core, budgeting is about understanding your financial limits and having a clear plan for managing your money. One key strategy is to automate deposits directly from your earnings into investment accounts or savings, ensuring that you consistently save and invest a portion of your income before you have a chance to spend it elsewhere. This approach prioritizes your financial goals and promotes disciplined saving. To make budgeting more manageable, you can use various tools and resources such as budget calculators. These tools help you track your income, expenses, and savings goals in a structured manner. They allow you to see where your money is going and identify areas where you can cut back or allocate more funds towards your financial priorities. Budget calculators also enable you to set realistic and achievable savings targets, making it easier to stay on track and build wealth over time. Thanks for watching. Don't forget to like, share, and subscribe so you don't miss an upload and you can enjoy the excellent content I send your way.